Hello, future engineers. You are in final year. Placements are near. Higher studies decisions are coming. Startups, jobs, MBA, businesses, investments, everything is about to begin. But let me ask you some serious questions. Do you understand how money moves in the economy? Do you know how companies raise funds? Do you know how salaries are paid? Loans are approved, startups are funded, and stock market grows. If not, then this topic, financial system, is not just a syllabus chapter. It is the operating system of the economy. And today I will make sure you understand it deeply. Why engineering students must learn this? You may think, sir, I'm an engineer. Why should I study finance? Let me tell you, tomorrow you may become software engineer in a fintech company, mechanical engineer in a manufacturing firm, entrepreneur starting your own business, data analyst in banking sector, investor in stock market, project manager handling budgets. And in all these roles, money decisions matter. If you understand machines but not money, someone else will manage your future. If you understand both technology and finance, you become unstoppable. All of you remember this line. Okay, you become unstoppable. You need to understand technology as well as finance. Think of the company like a giant machine. Every machine needs input. Every machine, needs processing. Every machine needs transmission. Every machine needs control. Every machine has to produce some output. Exactly the same way, financial system also has components. There are five major components. All of you remember there are five major components. First component is financial institutions, right? Financial institutions. These are organizations that handle money. We know that there are some commercial banks, NBFCs, banks, and mutual funds, and so on. These all comes under financial institutions. Banks, NBFCs, insurance companies, mutual funds. For example, your father deposits money in bank, right? That same bank gives education loan to students. So banks moves money from saver, the person who is going to keep the money in the bank, right? Maybe in the form of FD or any other form, he is a saver. And the person who is taking loan from the bank is the borrower. They are like pumps. These financial institutions are working like pumps in a hydraulic system. So this is the first component of Indian financial system known as financial institutions. Let us study the second component of financial system, which is financial market. Money market, where money instruments are brought and sold. This is, just we can say the market word. You focus on the market word where buyers and sellers come together and they exchange. Similarly here, where money instruments are brought and sold, right? There are two types of money instruments: money market instrument and capital market instrument. Money market, it is a short term. up to 1 year. The duration is up to 1 year. For example, treasury bills, commercial papers, and so on. Their maturation, no maturity period is less than 1 year. Second is the capital market. Long-term funds means more than 1 year. Example, shares, bonds, stocks, right? Their maturity, there is no maturity. It is, more than 1 year. Money market, right? Temporary, just like a temporary battery backup. But capital market is permanent power supply. So this is the second component of Indian financial system. Third is financial instruments. Okay, just now we have discussed it. There are documents representing money claim, right? For example, shares, debentures, bonds, mutual fund units. When you buy shares, you become part owner of a company. You will get ownership. If you buy a shares, equity shares, you will get a partial ownership. Imagine buying shares of a company whose software you are using, or you are buying shares of a company, their products we are consume in our day-to-day life. So this was the third component of financial system. Fourth is financial services. These are support services. For example, insurance, leasing, portfolio management, credit cards, digital payments. Today, when you scan QR code and pay instantly, this is the financial service innovation. You know, uh, One of the best, example of this financial services is UPI, right? You can see here, these are the components we are arranged in order. First is financial institutions we have discussed. Second is financial market, where money market and capital market. Third is financial instruments, equity, debt, derivatives, bills, and so on. Fourth is financial services, where we have discussed advising, credits, rating, asset management, and so on. There is one more. There is one more. Fifth one is regulatory bodies. RBI, SEBI, IRDAI, all are regulatory bodies. Every system needs control panel, right? So RBI, Reserve Bank of India, India's central bank and a regulatory body responsible for monetary stability, regulating banks and supervising NBFCs. Second is SEBI, Securities and Exchange Board of India, the regulator for the securities market in India, ensuring investor protection and market transparency. Third is IRDAI, Insurance Regulatory and Development Authority of India, the central authority regulating and developing the insurance industry is in the India. They protect people and keep markets stable. Like in engineering, no control system means, it is equivalent to dangerous instability. Same in finance also. So if you summarize all five components of the financial system, just now we have discussed here financial institutions, financial market, financial uh, instruments, financial services, regulatory bodies. All of you remember, first one is financial institutions where banks are come, financial market where share market, money market or capital market will come. Third is financial instruments, equity, debt, derivatives, bill, financial services, advising, credit rating, asset management, and so on. Regulatory bodies, RBI, SEBI, and IRD. Together, these components ensure smooth fund transfer, saving, investment, and economic development. Many engineers graduate with coding skills, right? But a very few understand sal- very few understand salary planning, investments, EMI decisions, startups funding, company finance, stock valuation, and those who understand this early grow faster than others. You worked hard for engineering degree. Now learn finance too, because your first salary can either disappear in expenses or become wealth through smart decisions. Your technical degree gives income, but your financial knowledge gives freedom. How to study this topic deeply? This is very important question. One regarding financial system, ask where does money come from, right? How controls money, or who controls money? Sorry. How do companies raise money? How do people invest? How do digital payments works? Then suddenly the chapter becomes real life. One of my friend, he shared his experience. Actually, in fact, he asked this question. Okay, suppose interviewer asks, "Tell me about Indian financial system." Most students panic, but you can answer confidently. That one answer may impress recruiter more than memorized formulas. So last, at the closing, I know you do not require any motivation. Already you are motivated. You are in a final year. So final year student, this is the time to become more than an engineer. Become a person who understands technology, finance, growth, and decision making. Because future leaders are multi-skilled. Study this chapter not for marks, study it for life. So thank you. We have started this series. Few more videos will come very soon. Thank you.